All right, I hit go live. Should play some music. All right, you guys are good?
You should be good.
All right, I'll give it a few. Some music. Hey everyone, we're gonna get started in about 1 minute. Just letting a few more people join us and get my screen set up. So, a couple minutes. Let me do change the screen share actually. All right, how's everybody doing this afternoon? Some of my guys on the team in the room here. I was just curious if you guys have any short Euro positions on, or what we're doing here from this morning. Okay. What we did here this morning, I just did a video. I guess I'll give my background real quick. Um, we were short euro here after ECB this morning, and I still think we're going to probably make new lower lows. We had a few trades. Anyway, I put that all on, I streamed that live earlier. There's a video on the blog, etc. But for those of you that are new, today we're just going to highlight a couple things. We're talking about the keys to creating consistency. And I think there's a little bit of a misconception out there when it comes to how do you become a consistent trader. And everyone wants to focus on looking for the magical indicators and magical setups or following the right individual, constantly looking for something that's going to give them a winning edge or some edge in the market where they're not going to lose, some system, and it just doesn't exist. Where actually the consistency lies is having a process that you can consistently execute on. What's part of that is having a trading plan. And then also, you need to have the right state of mind, because trading mostly is a psychological game. And so that's what we've been working on as a team the last several weeks. And so we're just going to continue on that a little bit today. But can everybody hear me okay? I'm actually out on the patio here, coming from South Florida. There's actually a gator swimming around in the back pond here on the golf course. You guys hear me okay? All right. So my background, I spent the last 10 years trading cash treasuries. I did it on an institutional level. I covered all the primary dealers, which are the big banks, and I covered a lot of hedge funds and buy-side firms. And we traded real size. I took real risk. I mean, a lot of times I was the entire bid in the treasury market at particular points. I mean, buying and trading, buying and selling 200 million tens at a clip. So we traded real size. I mean, probably between 60 and 80 billion a year in volume. And we didn't take positions overnight for the most part. I mean, I did work orders small. I had Goldman Sachs and RBS work my overnight orders. They'd pass them from Tokyo to London. But we did mostly a lot of directional day trading. And then so what my clients paid me for is they wanted to trade along with me in our directional model. So I'd call up a shop in Chicago, maybe a prop firm, maybe a market making type of individual shops, or somebody on the bank sell side that has a big portfolio. And some traders wanted to know where the next 10 ticks and tens were. Some were more longer term, maybe wanted to know the next 10 points on the 30-year. But the model that I built it's good for whether you're trading the 1 minute or trading out longer term. You're from Brazil? Okay. I like that. If you guys have questions, I mean, today we can be a little bit more interactive. I don't have any particular items that I wanted to really hit on. So I've been to Manaus in Brazil. I've been to Salvador. Been down the Amazon. It's a great place. Where in Brazil? Oh, okay. Very good. And what do you trade for the most part? Vespa? Okay. A lot of futures maybe? Yeah. All right. Very cool. Yeah, so anyway, that's a little bit about my background. And what I wanted to touch on today, I mean, we can just pick whatever particular market. And let me just go to a different screen. I don't know. I don't know what you mean there. Is that Alec top ideum? I don't know what that means. Um, let's just talk about the euro. So when I think about what makes a trader consistent, and here, guys, just for credibility purposes, let me share with you. This is just one. This is two books I traded. Um, the last year was on the sales side. I ran a rates desk, so you guys know I know what I'm talking about when I'm talking about consistency and what that looks like. So as a successful trader, obviously you're going to have losing trades, right? The idea is that you don't put together losing weeks or you don't put together losing months. So this is just two prop books I have trading treasuries. You guys can see here did 42,000 in January. The long bond was really moving this particular month. But I think I've only had one losing month as a professional directional, I guess, prop trader, if you want to call it. And it wasn't always that way. I mean, when I started out in my career at Charles Schwab, it was a lot of painful, a lot of losing days. But really what changed my trading was I started to incorporate the time component. And I think that's what really gives us an edge in where our firm is growing. And we've become that's just what really separates us out is everybody knows trend, everybody knows price, everybody has the same MACD on their chart, everyone has the same moving averages, but no one really understands this component of time and the cyclical aspects of what we built into our model. So we can talk a little bit about that today. But here's, so when we look at the euro, there's two components when you want to talk about analyzing the market. There's the price action, which is you're either in an uptrend, right, downtrend, or you're sideways. Pretty simple. And then within those trends, you could get situations as you're overbought or oversold. And those are all kind of concepts that are pretty easy. But what I teach my team is the right way to identify the trend. So there's no guessing. There's no moving average crosses. All those things are, if people are teaching those types of concepts, they're wrong, to be flat out honest with everybody. I mean, this blue line is a 30 period moving average. This green line is a 8, right? If you're waiting for these moving averages to cross, this is such a lagging indicator. You'll be constantly on the wrong side of the market. You're shorting here because it takes so much time for these moving averages to cross. I mean, it gets prices back above it here, but you're not below the 30, you're above the 30 here. You get another cross up. So what are you going to do? You're going to get long right here. And then all it does is turn out, cross back down. And I mean, I've done all those things. I've tried when I first started trading. That's the type of stuff that I would use. And you just come to find out the hard way that it doesn't work. So I teach my traders how to identify the trend correctly. And we call that I call that system the TMS, which stands for technical market structure. And it's simply pattern recognition of higher highs and higher lows relative to each other. And that's what really establishes the trend. So pretty simple, but sideways range trade, you have equidistant highs and lows, right? Uptrend, higher highs, right? Higher lows. Pretty simple stuff. That's obviously it's the reverse for downtrend. All right, but where are you going to identify those highs and lows is the question. So I teach my traders, we identify that at or near what we call the bands here, which is these lines, or the 30. But pretty simple here on the euro. This has been in a long-term downtrend. Prior to 2014, before you broke down, you were actually making higher lows here and here. And then when you failed to, you took these lows out, this was the first sign of possible down trade, right? And then when you took this out here, it was all over. And this started your downtrend, long-term downtrend in the euro. We've been in that ever since, so 2014. So it's been my call. It's pretty simple, but when you realize where that market's going to change trend, you can play the particular market that way as what we call a core position or longer term trading for several years, using this as your line in the sand. So it's been my call for a while now. We're not going to be bulls on the euro versus the dollar until you get me above 116, 117. And for reasons that I just said with how we look at TMS. It becomes a little bit easier to see sometimes, guys, on the, that's the monthly chart. Here's a chart on the euro on the weekly level. All right, and so this is the first time here where we've actually seen possible, well, we have seen intermediate term strength on the euro. And this gives me a little bit of pause that we can maybe test 115 because we're now above this area. But this is the key spot. This is a huge area here longer term. You have the 200 coming down, all that. So that's what we do on, that's some of the concepts we use to look at trend. There's a lot of other techniques, but I don't want to obviously give away the whole model here in just this free session. So that's kind of what we look at from a price standpoint. And then the other big piece in our model is what we call the cycles, right? Or having a concept of time. And there's a lot to cover on when you want to start understanding cycles. But it's obviously a dimension that we all live in, and it affects everything, every field of, all the different fields of science, you name it. But for some reason, when we think about trading, nobody really applies it into their process. But I mean, just looking at the euro chart here, you can see, I mean, I can eyeball it and see the cycles. It's just such a clear rhythm. All right. Here, highs and lows, all with the longer term cycle. Here, cycle peaks out, still peaked here in price. And then at this point, we actually have somewhat of a cycle inversion where you got a high up here with the cycle, but this low produced a high on the cycle. And one of the simplest ways we identify that is using the slow stochastic oscillator. And we don't use this for overbought or oversold. We use this as a rhythm of time. So like a pendulum swings, or, some of you have, obviously people understand music. There's a rhythm that when you time how you're going to play your instrument, it's all about the same cyclical rhythms that exist in all kinds of different fields. So they exist in trading. They're real once you start to understand them. Your timing and consistency, I mean, it just absolutely is night and day. So I can show you these same cycles on a monthly chart. I can show them, we use them on the 15-minute chart. Move this down. All right. Oh, 1 second. So let's just look at a 30-minute chart here. Oh, here's 30-minute chart of the euro. And then, a lot of people will use these stochastics as a overbought, oversold. And again, I don't like that, because you can have price be oversold and still be at the top of the cycle. What we like to do is, again, just realize that it's measuring a certain amount of time that's gone by. And so here at the bottom of the cycle right here, all right, this is looking pretty bearish to a lot of people. But my traders know we didn't chase it down here because we were lower than the cycle. So you didn't have a cycle cross till right here, which actually puts you into this point right on the what we call the right-hand side of the chart, or the right-hand side of the cycle. So if you're shorting too early on the wrong side of the cycle, you're getting run over. When you understand this concept of time, you can start your trade at a much better location. And we want to actually be executing here with more of our risk, more of our size, and what we call the right-hand side of the chart, and that's right in here. All right. So we execute on these cycles, and we do it within the trend. All right. Here's a high. Cycle rolls over here, along with the trend. This is all just bearish. Just had another down cycle start right now, which kind of makes me think we can make a lower low. But to really be consistent, that's just what I found, is that you have to put not just the simple concepts of getting the trend right, you have to get this understanding of time and these cycle concepts. When you build that in, there's so many instances where you'll stay away from a trade, you'll exit the trade before the market turns. It's all because it's just time. And that's something that we really focus on. Do you guys have any particular securities you want to look at? I mean, I'm not really big in the lecture style. I'd rather have it more interactive. Switch over to YouTube. Okay. How would you hold your positions on average? It depends. I mean, I have really kind of two styles of market play. We have day trading, and a lot of times I'll keep what I call a core position, and that's how professionals trade. I mean, it's not, they don't decide one Monday they're going to take a position on the euro and then close it by Friday. I mean, especially when you're trading global macro. So when you want to get the cycle right, whether you're looking at growth accelerating, you're trying to get US equities right, the growth curve of the economy right, or you're trying to get inflation right. I mean, these cycles, even in the economy, are longer term, right? 3 months or more, 5 months, 6 months. So the right way to trade those types of moves is to keep a core position, and then you trade around that position. So for example, on the euro here, I think that we probably had 15 different trades here on the euro this year, swing trades and longer term trades. So to answer the question would be, day trading, obviously you close the trade out right by the end of the day. And then you have swing trade time frames, which are 2 days to usually 5 to 8 days. That's a swing time frame. And then a long-term trade for me is anything that's several weeks to several months. It could be 12 months, it could be 16 months. And so I may have a core position that I hold for a week, I may have a core position I hold for an entire year. But there's going to be points depending on the swing trade trend, depending on the day trade, whether you get overbought or oversold, where you're going to add to that position and reduce to that position. So that's called trading around your core position. So like on the euro here, I also call that adding and reducing. So here's your lows. Let's say you start a core position on the euro here. All right.
you're getting pretty oversold a couple weeks here into these lows, you want to be taking profit. All right, you move back up towards the highs, you might be increasing your short. I ended up selling into this. This was the Trump election. I was up that morning for that. And I held the core position short all the way. This entire move down the rest of the year. But I'm obviously covering into the lows, right? Then we're reshorting. And again, look at these cycles. Here's the top of your cycle, boom, down. Here's the top of your cycle, boom, down. And then there's opportunities inside each one of these days to where you can add to your position even more, right? So we'll get even more aggressive on a day trade trend or a day trade setup. So those are the different time frames we play. TSX, Toronto Exchange. You guys gonna look at copper? Yeah, we can look at copper. Yeah, it is. All right, so let me show you guys. So these are some of our signals. I have a real-time alerts product. And I just encourage you guys to sign up. If nothing else, try it for a month. I mean, I put probably a dozen to 2 dozen signals across all markets every day, whether it's stuff we're day trading, uh, stuff on treasuries, bonds. You can see here, these are our copper signals, shorting, covering, reshorting, covering. Took a couple of stop losses here. This was a really big backup here. But then flipped and went long, played this dip long. So these are our signals that we put in our real-time alerts room. I mean, it's $100 and it's the same process that the banks would pay me literally tens of thousands of dollars a month for me to cover it's the same model and process. It's $100 a month. If you guys want to sign up for that, I can talk a little bit about it at the end here, but you just go to jenkinsrm.com. And at the top under services is real-time alerts. But here, 1 second, guys, I'll give you my rundown of what I think about copper now. I'm just moving inside because the maintenance guys are out mowing the golf course. 1 second. All right, guys. All right, sorry about that. So copper, I mean, so you can see some of our signals here. I haven't traded it really lately. I was a small core short going into the lows down here into 250. And I actually thought we were going to maybe test 240. But I agree. After today, it looks like we're trying to turn the corner there. Let's show you why, what I'm thinking on that one. So this in our model was clearly this whole area right here started the longer term bull market. This was your first main pullback. After the first leg up, this is your second leg up. And then here we obviously got a little bit choppy, but breaking what we call the bands here, this was bearish, especially you were getting lower highs. So I was playing this intermediate term short and then was actually looking for a move. When we break these bands, we tend to get moves back to what we call our pi cycle and or the 200. So that was kind of my thinking here. When we broke 260, you couldn't hold on to it. We get a move back to the 200. Um, so we'll see. The market has put in a little bit of an inverse head and shoulders. I don't know if some of you guys know that pattern. All right, but from here, this is going to be the key pivot right here. If we get above, I don't know, what is that, 261? This is going to start to turn up and look more bullish for sure. Right, get above here, we could easily test here, maybe go back to the highs from earlier in the year. Yeah, so but that's good, guys. You put in more questions if you want. Let me just hit on a couple other topics. So those are the cyclical components, the analysis part of our model. Um, I teach I teach a three-pillar process. So it's analysis, execution, and then risk. You have to be able to put all three together. It does you no good to be able to identify the trend. You can Any technician can give you a trend line and can tell you if you're in a bull market or something's oversold or overbought. But if you don't know how to apply the right size, if you don't know how to build into a position, if you don't know how to scale out, you can be too heavy too early and it totally will foul up your trade. You'll stop out and end up being right. Um, you have to be able to put the whole thing together. So that's what we teach in our model. But that's on the technical side. So then another big part of trading is the mental game or the psychology of trading. I call that mental analysis. So I've done a few videos on the different types of analysis and investing in trading. You have fundamental analysis, which everyone's pretty much familiar with, right? Valuation, earnings, sales, PEs, right? Discounted cash flow methods, all the stuff you learn in corporate finance. And that has its place, I would say, in investing, but you still have a real big problem. If you look at the value investors, they struggle with the timing piece of their business because there's value traps. You can have be right on your valuation and just be completely early, or the market doesn't agree with you, and you can really just get yourself all twisted up if you just focus on valuation. So that's my least favorite. Then you have technical analysis, came on the scene in the 80s. That's pretty much obvious. Everybody has a pretty good grasp on technicals. I'll tell you, if you join my team, you're really going to understand the technicals in a whole different way, because we have 7 or 8 setups I teach. I teach you location relative to where you are in the trend, how to identify that, what are you supposed to do when you're in those locations, what's the probabilities when that breaks, where you'll get a move to. So we do a lot of technicals. But again, it's the last 2 components that I think nobody really teaches and nobody really has a model for, and that's the cyclical analysis, and then this next part, which is mental analysis. And let me just, I had a couple of slides for you guys I did. Hopefully. This is kind of a work in progress. A couple of concepts. Let's see. So let me know if you guys can see this, okay? Let me take a second to move over online. Heikinashi. I don't, I've looked at those before, and it kind of gives you a good visual, but it's actually a little bit misleading. So you can use them, but I think the actual candles give you a better insight too. That gives you a better edge. They do remove the noise, but at the same time, when you start to learn little concepts within the noise, you eliminate that. I mean, I teach my traders one concept is called a BCI, which is a bullish candle ignored. Tends to mark the middle of a move. You can't see that in the Heikinashi. topping tail, takeouts, bullish engulfing patterns, all that stuff you can't see it when you're just using Hikinashi. But it is a good visual as far as it does seem to keep it simple. But I think once you have a higher level of technical training, you actually want to be able to see inside what's going on in some of those candles. But anyway, guys, so if you join my team, this is the stuff that we work on. So what's nice about our full access team is we're trading together every day, and it's not a DVD program. It's not a weekend seminar where you're in and you're out. You get the concepts, you go home, and it's tough to apply them, right? So when you work with me every day, it's the repetition, it's applying these concepts, it's seeing them live in real time, different scenarios as they play out. Total different learning curve, total different learning experience, right? But then when the market gets slow, I mean, we talk about these concepts of how you have to think and how you should think, because, well, let me just go through the process so I'm not jumping around here. A couple of these slides. So you guys see this all right, right? What really is the nature of trading? Does anybody have an answer for that one? Just out reading my next sentence. Squeeze this down. So this is how I think about trading. It's just pattern recognition game, all right? And it's a psychological and confidence game. So part of why our model works so well is because it does have a scientific component to it, where I said, look, everything energy moves in waves, right? Whether it's light traveling from the sun or energy moving through a body of water, and the wave goes up and down. So it's that wave motion that moves through markets, because it's just energy going through the markets. It's people. And of course, with people, you have emotions, which is a psychological piece, and the confidence piece. Especially when you talk global macro, it's the confidence which drives the currency, or the lack of confidence in the currency, lack of confidence in the bond market. So obviously confidence is a big piece, the psychological components of it. So that's really the crux of it. You're looking at pattern recognition, and then it's the psychological piece. So we use market analysis, which I kind of touched on, trends, setups, and cycles to identify the patterns. All right. And then we identify the risk, where we're wrong, how much we're willing to risk per trade, per day, per week. That's part of the trading plan I walk through my traders with. And then the proper mental state, which is, can you execute on your trading plan in a disciplined process? Or do you get a trade on and you get too excited and euphoric, and then you start to project into the market that copper is going to rally $5 in the next 2 days and you're going to make, a fortune? Or do you put a trade on, it goes against you and it pushes you a little bit, squeezes you a little bit, you're too heavy on your size too early, you panic, you end up selling into the exact lows where you're supposed to be increasing your size? All those things happen when you have a position and risk on, because it just affects your mental, where you're at mentally. It's just completely different. You guys have questions on that? So this was just me typing out some things earlier this week. So once we identify the pattern or the analysis piece, we identify the risk and we execute on that, then it's just mentally, really, it's just whether the trade works or not, I don't care. It's just one trade in a lifetime of trades. And you kind of have to have that mindset to just make yourself neutral, so you're more calm in the trade. and it's simple, but I know it's not easy. So it takes a lot of practice. It takes a lot of time inside of trades. It takes having real risk on. It takes times having too much risk on. I mean, I've been in positions where I meant to buy 10 million tens and you buy 100 million. So instead of it being $3,000 per tick, it's literally $30,000 per tick. And I mean, it's really easy to freeze. I mean, mentally, that type of fear, you can't do math. You try to figure out how many you're long. Did I just buy 90 or did I just buy 88? Okay, I bought 88 and then I bought another 2 lot. How many is that? I mean, I've had times where you can't do simple math like that because you have so much risk on. It's it's paralyzing. Literally can't do 88 plus 2 type of thing. Um, so anyway, I know what that's like, and so we work on that mental mindset when we're trading together as a team. Um, and then the other thing I'll say is, being a trader, the mindset is almost completely opposite of what we're taught and we're conditioned as you grow up, right? Um, and there's so many examples of this, but just a few in the markets. I mean, a lot of times in different professions, right? If you want to get more results, you have to work harder. You have to put in more hours, right? You have to do more, do more, do more, do more. In trading, it's a complete opposite. You can overtrade yourself into a situation where you're racking up all kinds of commissions. You're long, you're short, you're short, you're long. You're mentally going back and forth. So a lot of times in trading, usually actually having more patience. Like I teach my guys, hey, let's be more patient. We want to give ourselves more room, a wider area of the chart over a longer period of time. It's being more patient in the trade over a longer time horizon, being more patient as far as if you have a smaller position on, you can sit through a trade that goes against you over a wider area of the chart if you're patient on your size. Um, so that's an example. Trading is a complete opposite. You don't just trade more to be more successful in trading. It's the opposite. You have to usually do less and be more patient. Um, and so I've just found that too to be true. I mean, talking to a lot of people that are smart. I mean, I used to cover a guy. He's over at a hedge fund now. He used to run Deutsche Bank. Literally, he's a rocket scientist out of Oxford. And I would call him. Guy's obviously way smarter than me. He didn't want to hear anything, in my opinion, about the Fed. He didn't want to hear my opinion about GDP, right? Guy's 100 times smarter than me. But in my experience, it's those guys sometimes too that have the biggest egos. And so it's not about how much you know. It's actually almost better to trade from a state of where you don't need to know. Um, and that's another concept that it's kind of hard to grasp, but it's true in life that it's the complete opposite of what you think. We have to be really smart. We have to do all this analysis on gold to figure out what we're going to do the next 3 month move. I need to know what the inventory levels are. I need to know what the supply is in the mining industry. All this concept of you have to know, have to know, have to know. It's the complete opposite. To be consistent, you have to get into the state of where you're completely comfortable with not knowing, and you're in a state of, I don't know what's going to happen next. I see where the edge is on my chart. If we break this high, there's a good chance we go higher, but I don't know. Anything can happen. Or at the same time, if we take out this low with the cycle rolls over, fine, we're going to go lower. That's definitely possible, but again, anything can happen. And so when you get into a state like that, completely different trading. And I'll tell you the biggest reason why that is because of expectations. So, I mean, how many of you have been in a trade before, right, where it was in a downtrend, it starts to move into an uptrend, whatever you're using to identify that uptrend, whether it's whatever system you use to identify a trend, and you're short, it starts to move into an uptrend, and you fight it, right? You stay short, right? You try to add to it. You're like, okay, it's got to roll over here. It goes a little higher. Oh, no, no. All right, it's got to roll over here. Um, and you just fight it, right? The entire morning or entire afternoon. And then eventually you stop out, you have a really shitty day. You look back on it and you look at the trend and you're like, that was the most obvious uptrend I've ever seen. I mean, here are all my indicators. Everything that I study was telling me it's in an uptrend, and you fought it the entire time. I mean, how many of you have done that? I mean, I've probably done that daily and weekly for years when I was early in my career. And that's part of the reason why you do that, is because it's the mental block that comes in. You would put an expectation in the market that you want to win, it's going to go down, it's got to fail, it can't go against you for this long. And you set that expectation in your mind. And then what happens is the human brain wants to avoid pain. So you move into what's called pain avoidance mechanisms, and you'll completely block out all the information that's telling you it's in an uptrend. And this happens with the best traders, it happens with the biggest traders, it happens with everyone. It's just human psychology. And so the way to combat that is you have to approach the market from a neutral mindset. So you don't look at the market as positively charged or negatively charged. The market's not moving against you. You're not fighting the market. You're not trading against the market. It's just moving tick up, tick down. It's just energy flow. And that's it. It doesn't know your position. It doesn't have it out for you. But the key is, I'll go back to this slide. So we call that, you want to be rigid in your rules as far as your trading plan, but you want to be flexible in your expectations. And I would say 95% of traders have that completely backwards. They're very loose in their rules. Oh yeah, well, it broke this, but I'll let it go a little bit further. Oh, okay, I'll move my stop a little bit higher. I see this higher time frame, moving average, right? They're too loose in their rules instead of sticking to their trading plans, to doing what they said they're going to do. And then they're also too rigid in their expectations. Oh man, I know this is going to go down right here. I know it's going to fail right here. I know it's going to fail. It's going to roll over. It's going to go to these two targets based on this trend line. And they project in their mind this mental scenario. I call that scenario building. And as soon as you do that, you're blocking out all the other information that's telling you what's actually happening. Because you projecting in the future into the market is not reality. What's happening on the screen right in the moment is what's happening in the now. So you want to try to trade in the now. And so when you're flexible in your expectations, that's comes from a place of, I don't know what's going to happen next. It could go up, it could go down. I don't really need to know. All I'm trying to do, and I'll show you guys some examples here on the chart. All we're trying to do is identify where the market's telling me, is it changing? Is it rolling back over? And that's kind of what we went over here on copper, right? It's the same thing. I'm not saying I have this opinion on copper because of all these reasons it should go to $4. That's just not helpful. But I can identify the fact that we stopped making lower lows here, made a higher low here. This is another lower high subsequent to this high. You take this out, boom, you can rally. That's if then. That's not setting an expectation and being egotistical and saying, I know the market's going to go higher in copper, blah, 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 blah. Right? You want to do if then. If the market moves above here, it's going to be in a new uptrend. The cycle is turning up. There's some resistance here, here, here. These are the next points it could move to. It's if then is how you want to trade. Anyways, guys, is that a couple things on the mental side that's helpful? You don't hear a lot of people talk about that. It's everybody who always wants to talk about the indicators or this setup or that setup. But they're all messed up mentally. Anyways, guys, that's kind of all I have today. I wanted to share with you. Here, check this out. This is our site. A lot of you have probably been here already. All right, it's jenkinsrm.com. All right, there's a little bit about me. This is new in the chat room. I'm going to start doing this in the mornings. And when we work with institutional guys, I would always do a global macro rundown in the morning. So you look at all the different markets, right? You're looking at what happened in Asia, what happened in London, what's going on with bond yields, what's going on with the 10-year, what's going on with gold, what's the dollar doing, et cetera. You kind of got to look at everything together because everything's connected. I'm going to start doing a rundown in the chat room every morning. Okay, it'll be free. But to get in there and get involved with that, you just literally have to click here, boom. You have to fill out like your email and a couple other items. It takes 2 seconds, right? And then you're in our, you're within our, what do you want to call it? Our team, right? As far as what we're doing and what I'm thinking. And then here's the real-time alerts service too. I mean, it's $100 a month. It's cheaper than cable, but save you money, make you money. I mean, just today alone, let me show you guys what this looks like in real time. Just today alone, this is what we were able to, I mean, I don't, one day is worth $100 in the room. Here we go. Yeah. So these are real-time alerts. This is my day trades. This is what we're signaling or seeing across the swing trade environment, longer term. So here it came in. This is covering the euro. All right, so I had a core short. This is before the ECB. Covering euros. All right, here's the 10-year. I'm covering a core short I have there. I mean, it's small gains, $1,300 on 6 contracts, but now watch. This is covering more of the euro into the low. All right, we ended up later bouncing about halfway back up that move and reshorting. This was a day trade signal on the 30-year. Okay, day trade. Just on that alone, 2 contracts pays for the entire service for the entire month. This was me selling a 10-year, same kind of move. I sold bonds and 10s up here because, again, remember I covered into the low, so then we were reshorting. This was a day trade I started on pound yen, pretty much near the low. It was one of my traders picked up on that this 15-minute cycle was low. Here's me covering half of the long bond short that we had started about 30 minutes earlier. Okay, just coming out of that trade alone right there, $375 on 2 contracts. I mean, is that worth it in real-time alerts? 1 trade of half a dozen I put in here. Here's the outcome of this pound yen move. That was a winning trade right there. That's all because of the cycle right there. So here's 10s again. We covered, reshorted, covered. 10 ticks, covered, rallied 10 ticks, sold again, came back down, covered for another 10 ticks. So that brought me up to $2,000 on the day there. But this is just what we do all day long. So that's a great service, real-time alerts. And then, well, let me just show you guys kind of the batting average we have on that. No, I just updated this today. So this is year-to-date swing positions. Swing positions and longer-term core positions. These are all the signals for in futures we did. All right, so 83% win rate. That's how we were last year. That was true for stocks. That was true for Forex. I'll show you in a second. So this is the type of consistency the model cranks out. And then on the mental side, the consistent parts is what I work on you with, and the coaching and the daily sessions. All right. And to get that, you want to join the full access team. And that's the name of my team where we trade together every day. I'll show you where to sign up for that in a second. I think you guys kind of get the point. This is these are some more alerts that we did here. This is dollar Swissy. These are some calls on oil, euro. You know, sometimes these trades go against you. You got to learn how to trade in negative territory, but it's kind of learning to chip away and still finishing up on the day is the key. So just in summary, here's the. So you were usually around about 80% win rate on our real-time alert signals. I just updated those FX and futures today. All right. And so, yeah, I would encourage you guys, if you want to sign up for that team, that's the best way to grow. It's the best way to learn. I mean, if I could, you know, I'll show you, let me show you where to sign up for this. I'll just put this in perspective. All right, guys. I mean, I've told this story over and over, but it's the right perspective. This full access team is going to be going up in price. This is the last time I'm having at this price. It's $2,000 to join the team. You get to trade with me every day. You get the real-time alerts. But just the coaching and learning in real time with me and being able to ask questions and interact. I paid $12,000 to learn to trade Forex. And I just learned some simple setups. It was a weekend type of thing. I had no mentor, nobody guiding me, no successful trader, nothing. I paid $12,000. But do you guys know the reason why some people will look at something like that, say, oh, $12,000, that's so expensive, you know, no way. And somebody else would look at the same product that's $500 and still have the same attitude. That all comes from self-worth, really. If you can think you can pay $10,000 for something and learn it and then go apply it in the marketplace, that means you have a certain amount of confidence in yourself. You go learn something in real estate for $10,000 and you say, okay, over the next 5 years, you think maybe I can make back my $10,000 investment? Yeah, absolutely. But that comes from, you know, I'm just always amazed that people spend more money on a TV than they want to trade, but they drag their feet on a program like this. It doesn't get any cheaper. So that price is going up, but if you guys want to sign up for that, it's right here, $2,000, okay? And then it's $90 per month after that, after the initial fee, which is, you know, that's nothing. It includes the real-time alerts. So that's where you can get started now, right there. And then what other questions do you guys have on some of this stuff? Yeah, you can also email support@jenkinsrm.com if you have more questions. Or you can hit me up here in the chat room. I'm always available. That's pretty much it, guys. I would say again, as far as signing up, if this is what you're excited about, you know, if you want to work with me, again, when I wanted to learn to trade, I didn't have a trader that would spend the time with me every day and work with me on these concepts that he learned over 10 years. And that's what's cool about this program. But it is going up next week because we're going to be rolling out a prop firm soon, prop side of this program. And it's going to probably be double and triple the price just because of the amount of people that are interested, and I can't work with everybody. All right, guys. Again, hope to see you in the room. Hope you got a couple concepts out of this, especially on the mental analysis side. And we'll look forward to seeing the room, and we'll see what the rest of the week has for us.
my traders and I were looking for a few things in the euro a little bit lower. I got some positions in treasuries. But I'll kind of try to update everybody on that. Some of you that are on the team, I'll send out a couple of videos later. A recap of the day and what we're working on. All right, you guys good? Check YouTube. Any more questions? All right, guys. Look forward to seeing you in some other room. Enjoy the rest of your day.